Hello, ladies and gentlemen. Welcome to today's morning outlook. I'm Joseph Novichkov, Senior Analyst at GDMFX. Starting with the US dollar, it held two-day decline against the euro on Fed's US policymakers meeting this week will say their intent to keep interest rates at a record low for an extended period, even as they end bond buying program. A gouge of the US currency headed for its first monthly drop since June as traders cut the probability the central bank will raise the rates, of course, by October 2015 to a 49% chance from 85% odds at the end of last month. The Fed, of course, will start meeting today. The yen fell against all except 3 of its 16 peers before the Bank of Japan sets policy this week, with some economists, of course, predicting an extension of monetary stimulus. ECB President Mario Draghi added new stimulus last month before measures announced in June were fully implemented. He's also said the euro region is suffering from pervasive unemployment. Now, the euro area slumped has, of course, spread it to Germany, the region's biggest economy, and previously its driver of growth. IFO business confidence we saw fell to the lowest since 2012 this month, and the Bundesbank has warned economic growth in the second half will not be the best this month. Now, continuing weakness could push the country's unemployment rate, which remains significantly low, below Spain and Italy at the peak of the debt crisis. Going to UK briefly, the pound over there rose versus the dollar, extending a gain from the end of last week as the gouge of retail sales exceeded forecasts and trading pattern, which suggested the UK currency was due to halt its downtrend. The sterling is poised to rally versus the dollar currency after forming a reversed head and shoulders pattern. Right now is at 1.6112 versus the USD. The rest of the majors, Euro USD looking for a reversal also at 1.2711, USD JPY 107.90. And something a little bit more about Japan. The central bank over there will consider moderating its language on inflation in a report this week to take account on the impact of low oil prices. Now, according to people familiar with the central bank discussions, well, this adds to another sign of warning also that the momentum in the world's third biggest economy, the effect of the 21% slump in oil prices since June are likely to pass. Now, this will also allow the Bank of Japan to maintain its view in the inflation, which is likely to hit its 2% target around the middle of the year, starting in April 2015. West Texas Intermediate fell for the third day on speculation. Crude inventories increased to near a 4-month high in the U.S., which, of course, all we know is the biggest oil consumer. The price is hovering around the $80 per barrel level right now. Gold, on the other hand, rebounded from a 2-week low as investors wait the increase of a physical demand before the Federal Reserve policymakers begin, as we mentioned, the 2-day meeting, at which they are expected to end the bond buying program. The price is right now holding firmly above $12.30 an ounce. And the economic calendar, what we can expect for today, 12:30 GMT, we can expect durable goods orders for US. Also, the consumer confidence at 14 GMT. That's all for today. Thanks for watching. Bye-bye.